Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and this is the Forex weekly outlook for the week of July the 5th, 2010. Now, to start the week, we're going to again begin with the US dollar index, but we're going to change things up a little bit this week. We're going to do some correlations on the currency pairs based to the US dollar index against some of the other commodities and equities now, but we are going to do it differently. So looking at the beginning of the presentation, we're going to start with the US dollar index. We got this sell signal on the US dollar index that I talked about about a week and a half ago. This signal started. Now this has progressed and it's actually gaining steam. So our key levels now come in at 86.04, 85.96, and again 85.22 on the 3-day predicted moving average. Now what we can assess from this is what we're going to do this week is we're going to now put the US dollar index against some of the currencies that make up the US dollar or the DXY. Now the importance of doing this so we can break down and see where is the US dollar coming under pressure. So what we're going to do here, we're going to put the US dollar index and we're going to put it up against the at least 5 of the other currencies that make up this index, except for the Swedish krona, because we don't actually forecast on that one. Now what we're going to do here, we're going to start with the main currency that affects the US dollar index, and that would of course be the euro. So what we're going to do is we're going to just back this up so everybody can see this. We're going to put the euro US currency pair and see what's happening. Now again, with the US dollar index, it's made 57.6% of the US dollar index is made up of the euro. So what we can see is happening here, we have this sell-off that's taken place, and the correlation here is very, very high. Now looking at this, we can see back at about June the 20th, I'm just estimating that day, I'm not going right to the day here, but we can see that the 3-day crossed over to the downside on the US dollar index and it crossed to the upside on the euro US dollar contracts. Now what's happening is we've run flat for about a week now. Now this most recent week that just went by, I talked about how the euro was likely to strengthen, where we were playing a range between 120, 185 and 124. We've now broken to the top side on this. Now what's also going to be of interest, what we're going to look at is we're going to look at the euro US and the euro futures contracts versus crude oil. Now there's another dynamic happening there too that's a point of interest. So I'll get to that shortly, but first what we want to looking at the US dollar index, and again the main currency of the US dollar index is the euro, 57.6%. This is, in my opinion, why the euro is breaking higher. Now we can see that this range, they tried to break, we got a false break to the downside only for it to turn around and shoot up higher. We've got the triple EMA crossover is getting ready to make its move higher. So to start the week on the euro, we're going to break it down, 123.20, 123.59 and 124.49 are critical levels on there. But by the look of this, we've got a break on the US dollar index, and again the euro currency a big player here. Now that's our first, the euro is the first pair in the, again 57.6% of the euro makes up the index. The next one is the Japanese yen. Now the Japanese yen makes up approximately 13.6% of this US dollar index. So now let's go and have a look and see what's happening on the US Japan currency pair. We can see that it's also heavily under pressure. We've got this sell signal here from Vantage Point that took place about the 91.50 area, and it's crashed all the way down into this 87 and 86.90. I think it hit a low this week, and again it coincides with the US dollar index. All of these things, so far we have the main driver, the euro, the secondary driver, the yen, both putting pressure on that US dollar index. Now again, we're going to break it down in and have a look at the exact currency pairs, but right now for this analogy, we're actually taking the US dollar index, we're doing the analysis on the US dollar index and the actual currencies that make up that index to illustrate what's happening here. Now another main driver here, as you know, we've been trading the British pound US dollar. We've been strictly buying that for about a month now. I've made nothing but long recommendations on that. They have been very, very good trades. Now what we're going to do is we're going to go in, have a look at the British pound US dollar and illustrate this. We can see as the US dollar index crossed to the downside, this is what I was seeing. The British pound is starting to cross to the upside. All of this to me was showing me that the US dollar index was going to weaken and the British pound would likely strengthen, making up part of that index. Now the British pound makes up 11.9% of the US dollar index. It's the third biggest currency in that index. So again, it's a driving factor. So far we've got euro strength, yen strength, and pound strength, all affecting this US dollar index, and that's why we've been putting out these signals for the last little while. The one that I caution everybody about is the US Japan. The US Japan can be a very volatile pair, and even though the index may be going down, US Japan could actually be going up. So we want to be very careful of that one. Now moving into another main driver in this, but it has a less trade weighted effect, is the US Canadian, or the Canadian dollar, I should say. So looking at this one is a bit confusing to say the least, but we're going to get into this in the presentation also to help everybody understand. US Canada is still basically playing a range between 108.50 and down in this 99.35 area, but what's happened here, the US dollar index is broken lower. This would normally suggest that the US CAD pair would also move lower. But again, I'm going to put up the light sweet crude contracts to demonstrate that, in my opinion, we've got a buy signal on the US Canadian pair, but it's my position that it's US CAD is getting ready for a break lower, not higher. We're still inside this range. The euro is breaking higher. The equities are a problem. So is crude oil, but crude oil is also playing a range too. But this is, again, the Canadian dollar makes up 9.1% of the US dollar index. So we can see how those other currencies are causing extreme weakness in the US dollar index. However, the Canadian dollar is somewhat suffering with the US dollar. Now there's a number of reasons for that. Canada is the US's biggest trading partner, from border to border. So what's happening is if there's weakness and all these things are happening in the US, they're indirectly affecting the Canadian dollar also. Now I can't do the Swiss krone, but what I can do is the US Swiss franc. Now looking at the US Swiss franc, again, we can see what's happening here. We've got this sell signal on the US Swiss franc, and this coincides again with the sell signal on the US dollar index. Now the US Swiss